There are two versions of buying a house in Sydney. The emotional version, where you imagine security, stability, family memories, and finally having your own place. And the mathematical version, where deposits are enormous, repayments are painful, stamp duty is brutal, and your salary suddenly looks very small. Today we're talking about the second version, because I ran the numbers and buying a house in Sydney is brutal. Not impossible, not pointless, but brutal. And if you're making one of the biggest financial decisions of your life, emotion alone is dangerous. You need numbers. So in this video, we're breaking down what buying really costs, why so many people feel locked out, and how smart people should think about the Sydney housing market now. Many people think they're failing because they can't buy quickly in Sydney. That's often false. The game itself is hard. Sydney property prices became disconnected from what average incomes comfortably support. So people compare themselves to older generations who bought under different conditions. Different prices, different ratios, different competition, different interest rates, different timing. If you feel behind, be careful not to compare yourself to a different era. Let's start with the first wall, the deposit. Before you even own anything, you may need tens or hundreds of thousands of dollars. That can take years, especially while paying rent. Think about the trap. You need to save aggressively while living in one of the most expensive cities in the country. That's why many buyers feel exhausted before they even begin. The deposit phase alone can delay life decisions, marriage timing, children timing, location choices, career risk-taking, investing elsewhere. The opportunity cost is real. Then comes the cost people underestimate, buying costs. The stamp duty, the legal fees, inspections, moving costs, loan setup costs, potential repairs, furniture, appliances, trades. You may spend huge money before your first night sleeping there. That matters because people often calculate purchase price but forget transaction friction. Large one-off costs can wipe out liquidity, and liquidity matters after settlement because houses love surprises. Now, the monthly reality. Mortgage repayments can be confronting, especially when interest rates are not ultra low. People often focus on, can the bank approve me? Wrong question. Better question, can I sustainably live this way for years? Approval is not comfort. Approval is not safety. Approval is not flexibility. A bank may approve a stressful life. You need to assess your own margin honestly. Many renters compare rent to mortgage only. That misses the full picture. Owners also face council rates, strata, insurance, maintenance, repairs, renovations, appliance replacement, gardening or upkeep, interest variability. A house is not a one-time purchase. It is an ongoing financial organism that consumes resources. Sometimes worth it, sometimes underestimated. A salary that sounds strong can feel weak against Sydney housing. Why? Because homes are purchased with after-tax dollars, and life continues while you pay. So even solid earners may feel stretched when combining mortgage, childcare, transport, groceries, utilities, insurance, family costs. This is why many households look successful externally, yet feel pressure internally. Now let's be balanced. Buying is not automatically bad. Renting is not automatically bad. Buying can provide stability, control, long-term leverage, forced saving, emotional satisfaction. Renting can provide flexibility, lower responsibility, better cash flow in some cases, ability to invest elsewhere, and mobility. The lazy debate is emotional tribalism. The smart debate is numbers plus lifestyle fit plus time horizon. Despite the pain, people still buy in Sydney for understandable reasons. They want certainty, they want family roots, they want to escape rental instability, they believe long-term scarcity supports values, they want autonomy. These are all legitimate reasons. Just don't confuse emotional reasons with mathematical bargains. Sometimes you buy for life reasons, not optimal spreadsheet returns. That can still be rational. Smart buyers tend to do a few things differently. First, they buy below maximum capacity. This protects breathing room. Second, they keep emergency cash after purchase. Third, they think long term. Fourth, they ignore status pressure. Fifth, they understand total ownership cost. And sixth, they compare alternatives honestly. Many bad property decisions come from ego. Too big, too early, too stretched, too image-driven. If you feel locked out, don't collapse into hopelessness. You still have options. You may buy later, buy smaller, buy further out, buy with a partner, rent vest, increase income first, invest in shares while waiting, relocate strategically. The market is difficult. That does not mean your life is over. Avoid dramatic thinking. The biggest mistake is making housing your entire identity. Some people think, if I don't own in Sydney immediately, I've failed. False. Owning one expensive asset under pressure is not the only path to wealth. Many people build strong net worth through businesses, shares, disciplined investing, or buying elsewhere. Property is one path, not the only path. So when I say buying a house in Sydney is brutal, I mean this: the combination of deposit size, purchase costs, repayments, and ongoing expenses creates a very high bar. That reality should be respected, not romanticized, not denied, not blindly rushed into. Sydney housing may be hard, but hard markets reward clear thinking. Know your numbers. Separate emotion from affordability. Protect margin. Build assets regardless of path. And remember, you do not need to win someone else's property game. You need to win your own financial life. If this has helped, subscribe for realistic Australian money content with no hype. See you in the next one.